Hey, thanks for tuning in to Grow by Joe. In this video, we're going to talk about the different ways to finance a business. There's a number of different ways, and hopefully from this video, it'll help you be able to make the right decision. Thanks for tuning in to Grow by Joe. In this video, we're going to talk about all the ways that you can finance a business. There's a number of different ways, so before you make a decision, make sure to listen to this video.
All right, so when I think about financing for a business, I think about going to the bank and asking for a loan. But you're telling me that there's more ways of getting financing for a business?
Absolutely, and it's funny, going to a bank is probably one of the most challenging and probably least effective ways, especially today and especially after the Great Recession now. Yeah, so there are a number of different ways now that you can finance a business, and I guess it's really important to, are you looking to buy a business and you don't currently own one? Because there's some things to understand about that. And then do you have an existing business, and are you looking to take out financing on an existing business? Because those are two completely different things, and it's really important that we separate those. So one, you're looking to buy a business, or two, you're an existing business owner looking to finance your company. If you are looking to start a business or purchase a business, those are very limited ways. Really, I mean, if you're looking to buy a business, you can go out and raise equity and bring in a number of investors, but then you're giving up equity. In certain industries, that makes a ton of sense, especially depending on how much money you're going to need to raise. Really, if you're looking to purchase the typical small business, there's probably three ways that you can do it. One is to raise equity. Two is personal or credit card debt. Or three, maybe an SBA loan if it's some sort of a professional industry, like a medical practice or an accounting practice or a law practice. The SBA will really, if you're looking to just straight up start a business, that the SBA will only really finance those professional type businesses. So any other business out there, the SBA absolutely won't finance. So you're gonna have to really raise equity or use your personal money.
So when you mentioned using credit card, that one surprised me.
Yeah.
So if the business was within your credit limit, somebody would use their business credit card to actually purchase a business?
Yeah, business or personal credit cards. It's definitely, obviously, just like any business, there's a risk to that. But there's not really a number of business financing products to start a business. So it's going to be some sort of personal loan, really a credit card debt. There are some cool products out there that you can utilize your 401k.
Oh, interesting.
And you're actually able to pull it out without any type of tax.
So that's when you've got some collateral.
Yep.
You're starting a business that they're willing to take a chance on you a little bit, but you've got to have some collateral to back.
If there's something that you can utilize with your 401k, there's a special product out there where you're actually able to pull that 401k money out. You don't pay any taxes on it because you're putting it into some sort of a business. I don't really recommend that one. I think if you've got that money in there, in your 401k for retirement, it really should stay there. I would always say to not do that, but everyone's got a different appetite, for risk. But if you got your money into that 401k, I would keep it there. If it's smaller amount of money that's not going to be life changing for when you retire, then it actually might make sense to put it into a business if you got really something where you can replace that, and get that back in there.
Okay, so it sounds like most the business financing options available are then for somebody who's already got an established business. Maybe they need a loan. They got a project they're gonna do. Is that right?
Yeah, that's correct. We do some small startup financing. There's smaller dollar amounts. We definitely can help with that. Would be more something on like a personal loan side. But the core of what we do and really what's out there that we should focus on today is the different financing options that are out there for someone who is already owning a business. Selling equity could be really expensive, and it might not really be the right time. So if you don't have to give up any equity or sell equity, especially if you're in the early stages, I would absolutely seek out and search out all the different financing products.
So when you say sell equity, I'm thinking of like Shark Tank, where somebody goes on and they're like, I'm going to give you 20% of my company for X amount of money.
Exactly right.
Okay.
If you already got existing sales, then you can leverage those sales, and there's a number of different financing products that will give you the ability to leverage your existing sales and do some sort of a loan or advance against those sales. Again, if it's not the right time, if you don't need to sell equity, then I would don't do that if it's not the right time. I'd save that for maybe your end game or something like that.
Okay, so if I've got enough credibility or maybe track record, experience, sales, and I can get the financing, do that before I give up any equity.
Yeah, absolutely. And there's a number of financing products out there. We offer a small business loan, which is basically made up of your sales. Some of the lenders will look at your personal credit. Those we can work with really all credit profiles on a small business loan or a term loan. So those are some products that you should definitely look at.
What's a typical credit score?
So on the small business loan side, we can work with someone in the 500 credit score range that maybe is a little credit challenged, all the way up to 600 and 700 credit score. We're going to really focus on your existing sales. We'll look at some history there. We don't necessarily focus, you don't have to have a profitable tax return, but we're going to look at really what's going on in the business now, understand your recent cash flows, and basically work up some sort of an approval against where you're at today with your business. So
okay, and then line of credit, I mean, I've heard about that, and that sounds like a good option. Can you qualify for that in a similar way, or is there more?
Yeah, so a line of credit also works very similar. We're going to look at recent sales. Some of them are focused on personal credit, some are not. What's really great about a line of credit is you only pay for what you use. So if you're a business that's always purchasing inventory or always coming across different opportunities, you just want some money that'll strike, when the iron's hot, so to speak, you can get approved for a line of credit for 100 grand, 150 grand, or 250,000 and have that money on the sidelines for when you need it. If you're a business that's either seasonal or purchasing, constant inventory, it's great to have a line there. You might buy product and then sell it in 30 days. You can pay the line back and then use it again when you're looking to purchase that next round of inventory. So if you're in a business where you kind of need constant access to cash, a credit line is really probably the way to go. And there's some really cool new options that are out there today from a number of different lenders. And really depending on your business, the industry type, and then a few things that make up you and the business will make up, which lender really will approve you, give you the best deal.
Can you give me an example of one of those cool options?
Yeah, so one is truly revolving that will collect back payments on a monthly basis. There's some that will collect payments on a weekly basis. So, depending on the lender, may make up your payment terms. Sometimes people want monthly payments. Sometimes weekly payments make more sense because it's easier to manage your cash flow that way. So, there's some really new, unique products that collect back payments different. They're automated. There's some awesome line of credit options now that connect right to your QuickBooks and based on your sales. And as your sales increase, the line increases.
Oh, wow.
Which is really cool. And you literally can go online into into an online portal and click a button, have money into your bank account instantly. You don't even have to write a check or anything like that anymore, which is really, really cool. Those are great, and they're just super convenient. A lot of the newer credit lines will just connect right to your bank account and just make it really easy to draw money and then repay money, as well too.
Yeah, so tell me what crowdfunding or angel investors are. How does that work? Is that a good option?
There's a number of these crowdfunding platforms today, and I'm not saying that those are bad, but the only difference with that or an angel investor is you're going to have to really, package up your business, put together some presentations and some different things, and really present your business. And on a crowdfunding platform, there's a lot of people that are doing that today, but that can take time. So some of the other products I was talking about, we can have you approved the same day, and and funded within 24, 48 hours, or even the same day. On the crowdfunding platforms, it's great, but you literally have to wait for the crowd to fund you. That can be days, weeks, months, depending especially on the size. And there's a lot more information that you really need to put together so people can really understand your business and what you're looking to accomplish.
I mean, I've seen or heard of some of those campaigns that raise so much money, but it's probably the rare ones that I'm seeing.
Yeah.
All the ones that are taking forever and only, get...
For the typical business owner, crowdfunding, I think, could be a really drawn out process. A lot of the people that utilize these crowdfundings have some wild idea that's going to change the world, and and everyone's willing to kind of hop in and fuel that idea. Also, a lot of those crowdfundings too, a good amount of them will take pieces of equity. So it's really something you got to really watch out for, and look into. If you're looking for just a simple solution, I would stick to a small business loan, a term loan, or a line of credit.
Now I'm curious to know, what your opinion is on this. What about raising money from family and friends for your business?
Run! I mean, listen, everyone has got different dynamics of friends and family. I think, to me, it's probably always best to keep friends and family out of the business. I mean, there's a few things with that, and I joke around here, but in all seriousness, you know, do you want to be in bed, so to speak, with friends and family? And God forbid something goes wrong with the business, that can really ruin relationships. But what I think is more important here is not the risk of it or ruining a you know, family or friend relationship, or having people nag you of when they're going to get paid back or whatever. You know, if you're growing a business and building a business, there's going to come a point where, you know, friends and family are only going to help you to a certain point, and you're not really building a relationship with any lender. And as you grow, like any, you know, a lot of people don't realize when a business is growing, they need money even more, you know, to fuel that growth. So, and if there's a challenge or, you know, or something that, you know, comes up that's unexpected, you really want to have a relationship in place that can help you through the good times and the bad times. And friends and family, you know, we usually only be able to help to a certain point, and you're not really building a relationship with a lending institution.
Or any other tips that you have or suggestions on looking at the variety of different lending options?
Yeah, I mean, there's, you know, two other things that we really didn't talk about. Again, we talked about small business loans, term loans, and business lines of credit. Term loans are great, you know, because they go out much longer periods of time, usually 2, 3, and 5 years, and usually those have monthly or bi-monthly payments. You know, there's SBA loans that are out there. You know, SBA loans can be usually one of the lowest cost financing products. Those can be really great for a few things. One, if you're looking to purchase a building, you absolutely would, you know, probably look at some sort of an SBA loan. When you're talking about real estate and an SBA loan, they have there's a few different loan products that they offer, but they usually go out to about 25 years, and you only have to put down 10% to finance the building, which is really great. Cool. Most banks on a true commercial mortgage usually have to put down about 25 to 30%, so that's a big difference. One of the SBA loan products will also work in like a credit line along with the purchase of a piece of real estate, which can be really great to do any capital improvements when you move in. There, you know, the SBA also has like a 10-year working capital loan product, which is great. But the only thing is with an SBA loan is one, you need 3 years of personal business tax returns. If you don't really have a 3-year history, you're probably not going to qualify for it. You have to be showing a profit, and they only will do financing for certain industries, and some are excluded. So the other type of SBA loan product that's available is a 10-year working capital loan. Again, that's great, but you're going to need 3 years personal business tax returns. It's a longer process. I mean, a typical SBA loan process is really about 90 days. We've been able to cut that process down through technology and just knowing the guidelines and the ability to move quickly and all the paperwork that's needed. We've been able to cut that down to like 45 to 60 days. But again, if you're owning a business and you got an opportunity, you usually need the money yesterday, so I don't know if that really makes the most sense. The 10-year product is great because it's one of the longest working capital lengths of term that you can get out in the market today, which is great, and also has a monthly payment. But if you need constant access to capital, I don't know if that's the right product for you. The low rate's great, but when you amortize it out over 10 years, it can actually be more costly than some products that might seem to have a higher interest rate. But really, when you look at it long term, they can actually be more expensive. So you really gotta, you know, really what are you looking to use the money for? You know, if you're looking to do some improvements to a building, like a parking lot or a roof, where you're not really gonna see any return on your money, then having that nice 10 years to not kill your cash flow is awesome. But if you're purchasing inventory, or we're doing, you know, things in your business that are giving you a pretty quick, much more quicker return on cash, then having like a revolving credit line or the ability to work with a lender to constantly have access to capital is probably much more valuable. So it's really something that you should consider. And on top of that, an SBA will put a lien on a number of things, and they might even consider putting a lien on personal property. So you definitely want to understand that before you make a decision.
Okay, so what I'm hearing is that if I need some financing, I need some type of loan, I need somebody like you who knows all this different stuff to kind of sort through it. So for viewers that are interested in financing and need some help,
yeah,
you obviously offer some things. Where can they go and what should they expect to find, your website or whatnot?
Yeah, so you can check out the link below. We built, my company's National Business Capital, and we built a platform that has 75 plus lenders on it.
Oh, wow.
And we've literally cut down the headache of having to shop around from lender to lender. We've eliminated that. We've cut down the time that it would take to get approved, cut down unnecessary paperwork. We've utilized technology to make everything pretty much digital. So we've just really sped up the process, made it really easy. And listen, you're running a business. It's hard enough running your business, never mind taking the time to shop around from lender to lender. There's a lot of lenders out there, but they all have a different appetite for different industries, for different risk profiles. It can literally be exhausting, trying to shop around, and can become almost a second job. So we've understood that, and that's our mission, is to help business owners get financing in a very fast and simple and efficient way. And then on top of that, we have over 75 lenders on our platform. We're always adding to that. So, and all those lenders do different things. So imagine trying to navigate through that on your own. What's great is working with us is you can speak to a real experienced business financing consultant that can really walk through all the different products that are out there, understand what your needs are, and then tell you about some of the options that might make sense. And we'll bring back a few offers to you, and you can kind of look at those offers, understand what each one's about, and make a decision that makes the most sense for your business. So make it real easy. So let me know, guys, what did you think about this style of video? Was this helpful? Please let me know in the comments below. There's just a simple yes or a no, or things that you liked about it or didn't like, or what maybe you'd like to hear more of as a business owner or someone looking to be a business owner. Please comment below. That really helps us gear these videos. My goal is to help business owners grow all across the country and the world. So any advice from you guys that I can do to provide value is super, super important to me. So please comment below. Don't worry, I can handle it. Thanks for tuning in. I look forward to helping you grow your business. We'll talk soon. Take care.